I think this overhang of supply, generally these are VC deals with low floats and high FTVs, right, have become quite a problem in the liquid markets. I think they're the main narrative people point to when we talk about why it'll be difficult to get an alt season or an alt rally, right? And so you have this new dynamic playing out that we're starting to see where, companies are launching these SPACs and with the purpose of kind of mimicking the MicroStrategy playbook to some degree to buy some of these more altcoin type tokens. So I do think it could be something very powerful for the altcoin space. And it's really a win-win for both parties, right? The issuer as well as the investors or community of these tokens. So it's actually very, very interesting.
Hello, everyone. Welcome back to another episode of Mind with CoinFund. My name is Seth. I'm managing partner, head of Liquid, and Matt Potts is here with me, senior liquid investor on the team. How's it going, Matt?
Doing good, Seth. It's great to be here today.
Awesome. So, just the two of us on the show today. For those of you who have been watching our bi-weekly 15-minute sessions on liquid markets, this is going to be a little bit of that, a little bit of longer picture as well, pulling it all together. But we thought we would stay consistent with the theme of these podcasts, which is what's one thing in crypto that no one's talking about, but more people should be paying attention to. And when I say no one's talking about it, I'll frame it more as it's not really out on CT yet, but it's something that a lot of people are talking about in the investor community. And I'd say that's this trend around thinking about SPACs as a way to clean up a locked token overhang. Do you want to jump into that a little bit, Matt?
Yeah, I think this overhang of supply, generally these are VC deals with low floats and high FTVs, right, have become quite a problem in the liquid markets. I think they're the main narrative people point to when we talk about why it'll be difficult to get an alt season or an alt rally, right? And so you have this new dynamic playing out that we're starting to see where, companies are launching these SPACs and with the purpose of kind of mimicking the MicroStrategy playbook to some degree to buy some of these more altcoin type tokens. So I do think it could be something very powerful for the altcoin space. And it's really a win-win for both parties, right? The issuer as well as the investors or community of these tokens. So it's actually very, very interesting.
It's funny. The first time I heard about it, I was like, "Oh, buying discounted locked tokens sounds like that's not a great combo with SPACs." But then, as it was kind of laid out to me as well, you get the venture firms to sell some of their locked tokens at a discount, but because the SPAC has permanent capital and they're not going to have to sell the tokens, and you do a SPAC with an individual token in mind. So you're really kind of underwriting that token. You believe in that token over the long run. And because you never have to sell because you're permanent capital, you actually remove the overhang. And there are a bunch of analogies that people have pointed to where you could actually imagine trading at par, so meaning like without the discount, without a discount tied to it being locked, or even trading at a premium because of that locked capital dynamic. It's a really interesting framing. And when you think about some ecosystems that right now have this low flow to FDV overhang, like the Solana app ecosystem, where you have like great companies, great fundamentals, but the tokens just can't get a sustained bid because of that low flow to FDV. This could be a way of cleaning that up, and then you get a big re-rating in those tokens pretty quickly.
Yeah, I mean, I think we see it time and time again where there's projects that have great fundamentals. And you highlighted the Solana ecosystem, which is really a perfect one. A number of names there that fundamentally look fantastic, but have underperformed Solana for really many years now, right? And you can look at the growth, you can look at everything, and like these should all be trading higher, or they should be leading high beta to Solana, and they just haven't been, and it has to be because of this overhang of supply. So cleaning that up puts the fundamentals more in focus, and you allow these really good projects to now shine more where they're rewarded for those fundamentals.
And it's unexpected. Like right now, the view is just so it's a little bit like, and we can talk about this a little later, but it's a little bit like what we saw with ETH, where everyone was so universally negative on it that you start to get a bid and bam, it just pops higher. And I think we probably have some good follow through on that ETH BTC cross. Similar type of dynamic here where I think like a lot of these low float to FDVs are the short leg, or a group of them are the short leg in a bunch of pair trades. And if you start to get a reason for that narrative to change, it could be like a pretty powerful reversal.
Yeah, and I think another thing worth highlighting is the transparency of it all, right? Because a lot of times the fear with these low float high FDV tokens is there's probably some backdoor deal, OTC deals happening. You don't know any of the details for that. You don't know the vesting. You don't know what they were done at. This would be a very transparent way to see how that's happening, which I think the market would, I know I would really appreciate it, just the transparency angle of it, which this would bring as well.
And what's cool is that transparency angle ties into some of the guidance that we've gotten from the SEC about what they'll want to see from a disclosures perspective for tokens going forward. So I think it all kind of ties together really nicely.
Yeah.
Should we go on to just like high level? Like we've had a very nice move in markets, and I don't want this to. I want to be careful about not being too time sensitive and short term focused on this, but at the same time, the move has been very big across the altcoin space. I referenced ETH BTC having a big move. Dominance has dropped a ton. Why don't you start off just with some thoughts there, and we can kind of talk about that a little bit.
Yeah, highlighting the ETH BTC move, just really a historic move, actually. One of the largest moves in ETH BTC intraday in over 5 years last week, or 4 years last week. So just a massive move. And I think as you have highlighted, ETH, underweight ETH had just become such a consensus trade. I think ETH was the funding leg for a lot of short trades, a lot of pairs. And you just saw that hit a breaking point where ETH had a big move. And then with that, alts obviously had a big move on the back of that as well. It's interesting looking at dominance though, and we have talked about this a bit in the past, but to me the Bitcoin dominance chart was just broken, mostly due to ETH being such a significant part of that, ETH being 20% of the alt market, but the top 10 represent 50% of the alt market. So if you're not getting those top 10 tokens performing, ETH dominance is going to continue, Bitcoin dominance. And so what I've been watching was the others dominance chart, and this is on TradingView, the ticker's others, and then there's an others.d. And that, while Bitcoin dominance had been making new highs, others, which is an inverse to that, but is the altcoin market outside of the top 10. So excluding ETH, Solana, Tron, all the large caps, this index had been holding the bottom. So you were starting to see some divergence there that was telling you that breadth in the alt space was actually a little bit better than what we'd been seeing in Bitcoin dominance. But then once we got that move in ETH and that Bitcoin dom chart just, had a big move lower, you started to feel like the whole alt space was really participating at that point. And I think with so many people watching Bitcoin dominance, it gave people the coverage to get into alts and be like, all right, well, maybe this was the top for this cycle. So we'll see.
I mean, the reality is like one of the dynamics that we've debated internally about why Bitcoin dominance could be broken is the fact that the next closest market cap name to ETH was like, I don't know, a third, maybe a little more than a third of its market cap. So, and then it drops off really quickly from there. So you're looking at a metric that wasn't going to peak until ETH actually bottomed, which is why it made a lot of sense for us to be looking at others as well. But then, man, like you get that ETH move in there, and you get Bitcoin dominance rolling, others dominance ticking up in a really nice way. And it's funny, I put out a tweet a few days ago, and I was like, this move is going to have a big hindsight narrative dynamic to it. And what I meant by that was it was so hated. ETH was so hated, and it was hated because a lot of the like high velocity activity, the real time activity, has kind of fallen off on ETH in the short run. But once it starts to move, once ETH BTC starts to inflect, then you get this narrative of, well, of course it was going to inflect, right? Like it has the highest TVL by far, the highest total value lock by far. It's kind of an activist play right now. You have a lot of people around the ecosystem trying to fix ETH, trying to get it on the right path, a more commercial business development oriented path. You have like by far the largest stables volume. I think it's just under 50% of stables on ETH. And then it's the enterprise blockchain of choice right now. And that could change over time. But for right now, when we're hitting this inflection point at the intersection of TradFi and crypto, like ETH dominates that narrative. And again, there are lots of blockchains like Solana that are kind of coming into that discussion in a big way. But the majority of that enterprise activity is still on ETH. So it's like you get that move going, and then it's, well, hold on a sec. How did you not own ETH when all of those positive things were happening? It was the second biggest market cap out of all of crypto. And now it's outperformed Bitcoin by pick your number within a month, right? Like right now it's probably been about 20%, 25%, but it could easily finish the month 50% ahead of Bitcoin. So really interesting dynamic actually seeing that start to break and kind of the follow-on unwinds from it being, as you said, the funding side of a lot of trades for a while.
Yeah, and it's interesting, we've been having the conversations with some of our counterparties to hear that most of that flow has been happening in the derivatives market. They haven't been seeing as much spot buying. It's been a lot of call options, been a lot of call spreads, which makes me wonder, and I would love to hear your take on it. Like, are people not really buying this move where they just needed to get quick exposure, so they went to the options market? That to me is a little interesting that we're not seeing it play out as strongly in the spot market.
I think that's super interesting, and it makes me think that there are probably legs to the move. I think you could argue it either way, but I would lean toward the side of there being legs to this run for ETH versus Bitcoin because you still have people showing a hesitancy. I think that's a hesitancy. They need to be there quickly. I think their gut is that it still is an underperforming asset versus some of the other large caps, whether that's Bitcoin, Sol, Sui. So they're saying, you know what? I'll keep it underweight from a spot perspective, my most expensive capital, but I'll put on a bunch of calls. So from my perspective, and this is a little in the weeds, but I've been pretty careful just around like the option side because the IVs, the cost of the options has just gone up really quickly because a lot of people are looking to get exposure through options. So it's like you want to be careful around that. You could have a situation where spot starts to move, starts to grind higher, but you still have options come down in price because the vol got so elevated. That came off a little bit over the weekend though, but that was something that I was watching pretty closely. I think when I'm out talking to people about how we're thinking about the world at CoinFund, particularly on the liquid side, one of the things that comes up a lot is, well, hold on a sec. I thought the Trump administration has delivered for crypto. I thought there are a lot of tailwinds. Why is crypto broadly down so much? And in fact, before this weekend, CoinMarketCap has a breadth indicator, which is just it's their altcoin index. It's the percentage of the top 100 altcoins that are outperforming Bitcoin over the last 90 days. And until this weekend, it was hovering around 15, 16. And a few of those were actually gold tracking tokens. So they weren't even like real like crypto. So you're talking about less than 15% of the top 100 altcoins outperforming Bitcoin. And and the view that I was laying out was, listen, we have these clouds from tariffs, right? Clouds from policy, but underlying that, you've had one of the most powerful pushes in support of crypto that I've ever seen. So, like, the amount of things that have been delivered and the speed with which they've been delivered, whether it's the repeal of SAB 121, which made it difficult for banks to custody crypto, whether it's all of the lawsuits that have been dropped against the major players in the space. It's just one thing after another, putting out guidance on meme coins, putting out guidance on disclosures, even before you had a confirmed SEC chair, putting people in senior positions that are pro crypto. Like, you've had amazing outperformance on number of things and speed that they've happened in. You had those clouds over the industry from tariffs over capital markets in general, but they're starting to break here.
Yeah, it's funny that the launch of the Trump coin marked the top in January. And I don't know if those are correlated or not, but
I think
I
they
find
were.
it very interesting. Yeah.
I think they were. I
Well,
mean,
it's what,
it sucked liquidity out of the market.
yeah. Sucked liquidity out. And I think it did damage a bit of the, I don't want to say if it was morale or just what the end goals of this administration were. I think it created some doubt there. Are they just doing this to, you know, benefit themselves and their families? Or are they actually going to, promote meaningful legislation that will actually benefit the industry? I think that became a question for people. But at the end of the day, it's what we always do in crypto, especially liquid markets, where we priced everything in the day he got elected, and you saw that huge run up in Q4 and excitement, euphoria. We were back, and then he took office, and I think markets sobered up a little bit where, okay, this isn't happening today, right? And you lacked that strong catalyst path of, all right, well, what's happening in the next month? And we know things in the government take a lot of time. So you saw, the euphoria come out, tariffs, macro became an issue again, which is never good for crypto when we're talking about macro, it feels like. But now we're in this period, like you're saying, Seth, where the clouds are clearing. We're closer to these timelines. We're closer to the timelines that Trump had set for meaningful action to happen. And, macro is improving. It feels like a really good setup from that point where now you've almost priced out everything from Trump and this new administration. But now you're starting to see some of the fruits from that.
And again, you've almost priced it out, even though they've delivered way more and way faster than any of us would have thought at the start of the year. So that's the ARB opportunity where the macro stuff, the tariffs kind of mask the fact that things were going really well on a crypto specific deliverable basis. It's interesting. We've talked a lot about internally. There were kind of two big things that hit a few weeks ago in early April, second week of April. One was seeing the Trump put start to take action, so start to come into view. So what I mean by that is the idea that there was a pain threshold in markets that the administration was going to respond to. We didn't know if that was going to be the case until we started to see the bond markets starting to dysfunction, and that led to, and by that I mean things like the MOVE index spiking higher. That led to the 90-day delay for everyone except for China, and then we progressively moved toward what just happened. We're recording this on Monday, but the announcement of the preliminary or the initial deal with China. So you had the Trump put come into view, and you had stimulus globally. So starting to see that the response of countries around the world to the tariffs was to say, you know what, we're going to just pump liquidity, right? We're going to buy equities. We're going to do all this stimulus to protect our economy. Partially, you could argue because we don't think this is going to last forever. So let's stimulate now so we don't take pain when this is something that's temporary. But those two things seem to have caused the bottom for markets globally. And then that's creating the clouds parting, getting some deals coming together. That's creating the clouds parting dynamic, which lets us see through to the positive fundamentals for crypto.
Yeah, I think it's interesting on the back of that, the China US tariff news, the agreement that you saw, yields rally on that, right? And that could be from Fed fund futures now pricing out a July cut. The first cut's now September. It's just very interesting to me because initially, there was fear of inflation from the tariffs. We're removing that now. But now I guess it's a fear of growth, which is why yields are rallying. It's very interesting to me that we're rallying on the back of this.
I don't know if it's a fear of growth, but like in a very healthy growth environment, you will have people selling treasuries and going out into risk assets. And I think we're seeing a little bit of that today. If you look at the last decade, the risk on constellation was the dollar falling, 10-year yield going up, and equities rallying. Now, the interesting dynamic today is the dollar's appreciating, but it's appreciating, it looks like, because people are going into equities, not because they're going into treasuries.
Yeah, I think that makes sense. I just wonder if this becomes an issue for the administration now. Like if they continue to fields continue to rally, does this Trump put come back into play? Because that's what they were looking at, right? They were looking at yields.
But I think the question is they were looking at yields, but also bond market volatility. So VIX coming down today, that's equity market volatility. I haven't looked at what high yield spreads are doing, but I assume they're coming in. I assume the move is coming in today too. So my guess is like the actual like stress or risk elements are probably coming off today, but if yields keep going up, you're totally right. It does start to create a little more of a negative dynamic. What's really interesting is I'd say as of a few weeks ago, you started to hear that allocators felt like there was a little bit of an all clear. It's almost like allocators were comfortable being patient with crypto. And by crypto right now, I really just mean Bitcoin for these very big allocators. They were comfortable being patient as Bitcoin's price came in. But when you got the Trump vote, when you got the stimulus, I think you very quickly start to see people say, well, hold on a sec. What was I waiting for? Right? This is real. This is in play. And by the way, one of the things that, just to go back to your comment on yields, part of the reason why you might not have to be that concerned about yields moving higher is we've had a lot of talk about stable coins and the backing of those stable coins being treasuries and that being a really big new source of demand. Treasury came out last week and 2 weeks ago talking about 2 trillion of treasuries by 2028. Or, sorry, 2 trillion of stable coins backed by treasuries by 2028. So that's a new source of demand. These trade deals probably have a component of encouraging the countries to buy treasuries as well. So there's some reasons to think that you can cap the yields on treasuries if they do start to get out of control. But interestingly, seeing some really good momentum among the biggest allocators with the view that the dust is starting to settle and we want to be there in Bitcoin in particular.
And generally, what's the timeline for those? So when they start to get interested to when they actually allocate, like it's generally can be quick or how long is it?
So it's all over the map, but just working off of a few discussions, I'd say if you think about the election as being a point where they said, wow, this is a big change, they then start to prep their pitch for their IC, for their investment committee. Then you get in front of the investment committee, maybe it's before Christmas, maybe it's early in the year. So you're not really starting those purchases until Jan Feb. So a lot of them have good cost bases for their purchases because by the time they could get them going, they were going in a period of time where we were decently off of the highs for Bitcoin. But now that we've been bouncing back, I think a lot of them were like, this first tranche needs to get done under 100. They were really happy about where they were a few months ago, or let's call it 6 weeks ago. But now that we've rallied back, I think a lot of them have either tried to accelerate in the 90s or are potentially going to take a pause as we go over 100 with the view that let's see if we go back up below 100 and can not chase it. My guess is if everyone's waiting for a pullback, we probably don't see that big of a pullback.
Not gonna happen. Yeah. Yeah, I was also speaking with a fund out of Asia last week that mid-sized fund that could invest in really any asset class, but crypto was part of the assets they can invest in, and they were telling me that most all the capital they're deploying at this point is going into liquid crypto because that's where they're seeing the best opportunities versus equities. And I think that's right. When you look at, again, like we've talked about, like so many tokens are down 60, 70, 80% from their highs in December and January, right? And so fundamentally for those protocols, for those projects, literally nothing has changed. And so I think you can make the argument for a lot of them that things have gotten better. So you are seeing a lot of really good value opportunities in liquid crypto, which is rare, I would say. It doesn't always happen, right? So if you do have this opportunity, you can see why these funds are looking strongly at liquid crypto.
Well, and to your point about things having gotten better, but I think that this would actually be a great area to close off on. We're seeing a lot more talk. It really started with the Digital Asset Summit back in March, but a lot more talk from teams about we need to generate real fundamental value, so generate revenue or have a path to generating revenue. And then we need to capture that value in the token, one way or another. And that also raises some great questions around, well, how do I think about reinvestment in the business? If I have a lot of things that I want to reinvest in, should I not do those because you want the value going back to the token? Answer is no, but you need to be transparent around what the ROI is on those investments and why it's a better use of your capital to reinvest in the business rather than give that capital back to token holders. But this is all emerging from the dynamic where people know we're getting a regulatory regime, and we know that we have an SEC that is comfortable with crypto, that wants to work with crypto teams. So they're comfortable kind of taking a few steps in that direction, absent the clearest of guidance, knowing that this isn't going to be an SEC that's going to come after you if you're a good actor, if you're doing things in the right way. And as they give more clarity, you start to be compliant immediately with whatever clarity they're providing.
Yeah, I think that's right. It's hard from a liquid perspective when there's an equity entity there that is kind of taking some of that revenue, right? So we do need a cleaner delineation of the equity and the token. And I think as we get a framework, that becomes much clearer. And in defense of these protocols that, have both an equity and token, there hasn't been a framework, right? If you were creating revenue, you couldn't really legally pass that on to the token holder. So it made sense at the time to create these equity entities where maybe there are ways to, not necessarily benefit the token holder, but benefit the protocol, which then, as a second derivative, benefits the token holder. So I do think as we get regulation and we get guidelines around that, I think it just naturally will clear up. I think it has to clear up. I don't think we can live in a world where you have a token, but at the same time, you're kind of extracting some of that revenue or growth to an equity entity. I just don't think your equity holders will like it or the token holders will like it. You're not going to keep everyone happy. And it's just not going to work.
I think that's right. I mean, there's a big benefit to having equity when the project is still private because you get the traditional equity protections. But I think once you're liquid, you need very clear disclosures around how all of the senior management is incentivized. And you really need either very clear disclosures around the split of value capture between the equity and the token, or just to collapse it into one or the other. And if you have a liquid token, that would be collapsing it into the token. But if you don't have that clarity, if there's any ambiguity out there, if liquid investors feel like they've been blindsided by a decision that you made that just doesn't make sense because your incentives just aren't fully transparent to them, that's where your multiple compresses a ton, right? So you'll lose that in your token price pretty quickly. So I think that's spot on, Matt. Like having that delineation between the equity and the token, the value capture and transparency around that, super important for projects. It's funny. I think one of the questions that might be a little more controversial right now internally is great. So we're getting a lot of fundamental momentum, and a lot of that's pro-cyclical, meaning as the prices go up, you see more activity come back. Then we have a lot of things that are more idiosyncratic. But awesome. So you have fundamentals come back. You have people looking at value capture in the token. But if we're in a raging bull market, do we just go back to meme coins, right? Do we just go back to the frothiest of froth? And on the one hand, I think meme coins are a real innovation. They're going to have a lot of uses down the road. But on the other hand, like I think there's a large swath of the community that wants to see the equity analysis and valuation process be the end all be all and hold. And I'm just not sure. Just like you get meme stocks when there's like a raging bull market in equities, I just think you get back to a full risk on environment. And yes, the fundamental names will do well, but you'll also have a lot of people seeking greater amounts of risk.
Yeah, I, I'm still recovering from the last meme frenzy. I really hope we don't go back to that where memes are just sucking all of the capital in and it's all people are talking about because I agree with you to the extent where I think memes have a place, right? And I think they're a community. There's a number of projects that started off as memes and have turned into something real and something like building a business, right? I think that's the minority though. I think the memes just became a casino, right? And I don't know if that's like the best look for us as an industry to have that be our like biggest feature, our biggest export is being a meme casino. But I do think they'll come back. I think there's no doubt they'll come back. I do think a lot of that excitement will be siphoned off a bit by AI and the AI agents, which do have a meme like element to them. But now they're like memes 2.0, right? Where it's a meme where you have your mascot or whatever, but this is a agent that you can interact with, right? And it's posting insights or art or content to Twitter. Like it's almost a meme 2.0. And that feels like it's a little more backed by fundamentals for me. Like I can make a case for that more than I can just a static meme that's just recirculating, regurgitating the same thing over and over again. So I'd like to see that be where it goes. I hope that's where it goes. But I do think it has a place, but I think I hope it'll evolve into something a little more exciting.
But remember, so memes really took off. Forget like the OG ones, but memes really
Mm-hmm.
took off because we had this big regulatory crackdown. So they were
Yeah.
seen as if you literally have no utility, then you're in this like regulatory safe harbor, and Hester Peirce kind of solidified that a few months ago. So if we actually have a setup where a lot of people that did memes actually had ideas for using that community to generate something real, right? Whether it was Bonk or Whiff or there were a bunch of, and the list goes on and on of memes that had the potential to do something coordinated, but then they were always concerned about, are we going to cross some regulatory line? So now if that's clear and if they can do that in a way that's fully compliant, I think you unlock the broader potential of being able to spin up a community that centers around a particular element, and maybe you use it in social media as kind of the currency of that social media. Maybe you use it in more of an investment DAO dynamic, like what we were seeing toward the end of the NFT phase a few years ago. So I think there are a lot of valuable ways that it can be used, but you just had so many blockers in place, and this might be the time where you can get that speculative fervor, which then translates into actually using that value that you created for something that's like really valuable, being able to translate it into a real business.
Yeah, I can see that. I mean, the way I'm kind of looking at it is NFTs were kind of the first iteration of a meme, and you saw a lot of legitimate projects come from that, right? Like Barra comes to mind, Pengu Abstract, right? Those come to mind. And now you saw the next iteration of that, which was instead of being non fungible tokens, you had fungible tokens that were memes, right? And Bonk, Whiff, like a lot of big ones, Pepe, a number of those became these mega cap tokens and are building real products on the back of that. I think the next cycle, the next version will be slightly different. I don't think it'll be like the whiffs and bonks of the world. I think it'll be something different. I think it'll be more agentic, more AI backed. I think we'll evolve a bit, and I think that's what we'll see.
I think that's definitely like high on the list of things that could happen there. I also think we'll start seeing existing IP. A lot of this was like generating new IP. but I think we'll see existing IP thrown into the meme mix as well. And that could be super powerful.
Yeah.
Awesome. Well, I think that was a really good initial just markets chat.
Yep. I agree. Thank you so much for listening. If you feel passionately that we got something right or wrong today, let's keep the conversation going and leave us a review and let us know what you thought. If you'd like to follow me on Twitter, my handle is Matt with three T's, MATTT, Potts, POTTS. And Seth's handle is Seth Gens, SETHGINNS. And be sure to download Mind with CoinFund wherever you get your podcasts. And we'll be back soon to dig deep on ideas that are worth fighting for. Thank you. Thank you, Seth.
Awesome. Thanks, Matt. Thanks, everyone.